If for some reason were that merger not to happen, which would be unprecedented, we still believe the transaction has merits, and most of the synergies, we would be able to capture most of the synergies.
So that is all on the assumption that 1, you have your ducks on a row, 2, this gets approved, or 3, that you even are able to be left with a stake if not a merger. What if you're wrong?
Well, if we're wrong, and for example, the Sabadell shareholders decide not to tender, which I think is the key critical decision maker, apart from the other decision makers I just covered, BBVA would continue with the momentum, the positive momentum that the bank has. We had a 17.7% return on tangible equity in the first quarter. We have a 20% increase in tangible book value per share in the last 12 months. And this has continued for a few years now. And on both metrics, we're top of the league in European banking among our peers. Also, on the other dimension that matters, which is growth, if we look at the growth of our loan book, we're talking about 9.5% growth in constant euro terms, 7% in current euro terms. So on growth, on returns, we're top of the league, and BBVA would continue in that improbable scenario, the good momentum, the good course in which we're on.
So one of the criticisms of this deal is the value of it, and that this isn't a juicy enough offer. Would you consider raising your value?
We have presented a knockout offer to the Sabadell shareholders. It's a premium of 50% over the 3 months prior to the presentation of the transaction. On top of that juicy premium, we're very rich. The offer is an offer in shares, which means that the Sabadell shareholders will participate with a 16% ownership on the combined entity. And that means participating on the value of the synergies, the 850 million euro per year cost savings, which represent multi-billion-dollar value. 60% of that multi-billion-dollar value will accrue to the Sabadell shareholders. And maybe the summary of it all is the earnings per share accretion that you can calculate is 27% increase in earnings per share for the Sabadell shareholders. It's a very, very attractive offer that we're sure will convince the shareholders to tender their shares.
So no appetite then to sweeten the deal. This is your final offer.
As I said, we have no intention and we have no need to improve the offer. It's very rich comparing with precedents. The market is also telling us that the offer is worth more than Sabadell standalone, and that's why we are not changing it.